Okay. All right, we'll keep talking about Neo. Right, you're in a downtrend here. Your 8's on the bottom, your 60's on the top, so you should be short. Right, add some shorts into the top of the bands. Anything above the 30. Right, so I'll highlight the 30 here on my daily. All right, and this is the point where your bands flip and you're back in an uptrend. All right, you're making long-term higher highs, and then you get the higher low. So you're making higher highs and higher lows now. This is the point where you stop shorting and you can buy dips. Right? And the reason I've highlighted this 30 on the daily is because, you know, this is not a setup necessarily. That just came into the top of the bands. And we're not always going to short just because we're at the top of the bands, right? We want to cycle cross. We want to set up. And we see the cycle crosses here, which is actually right here in price. So what we can do is use a lower time frame to catch this. All right, let me go all the way back here. Okay, so, oh goodness. Got a lot of drawings here, right? If you remember, this green line I drew in, that's the 30 on the daily. So that's the middle of our bands, right? And we want to be adding shorts above that, all right? Remember, our bands are in a downtrend on the daily. So on the 4-hour, we can see this based on the direction of pi, okay? Because pi lines up closely with the 60, which is the bottom of the bands. And I'll highlight this too, because it's pretty important. Well, I'll go into this more in the multiple time frame analysis video, but this will give you a peek, all right? This is the bottom of the bands. In this case, it's the top because we're in a downtrend, but you guys get what I'm talking about, right? So that's the bottom of the bands. And if we look at the 4-hour, you can see that bottom of the bands lines up pretty closely with pi. All right, and again, it's not exact because these are just areas. They're not exact pinpoint spots or anything like that. But when we come in and we look and we see, all right, pi looks pretty much the same directionally, angularly, all that stuff, and even location-wise to the bottom of the bands on the daily. And we'll use this a lot, okay? We'll use this a lot. And the bands on the 4-hour are like the 8 on the daily, okay? So now we're starting to see, let me hide candles here again. And, well, I won't hide the bands, but try and ignore the actual bands. Think of these bands here as the 8 on the daily, and you can start to see we have our daily bands here, right? We have the top band, and we have the 8, which is our EMA bands here. And if this is confusing you, don't worry. Again, I'm going to go into it in detail in a later post, but let's do the same thing we did in the daily, right? If pi is like your band on your daily, okay, then you're in a downtrend when you're below it. And when the 8 flips above it, you're in an uptrend. Okay? And then when you break back below it, you're back in a downtrend. You get above it, you're back in an uptrend. Break below it, you're in a downtrend. Break above it, short-term uptrend. Back below it, downtrend. Okay? And it's good to see this because then if you're trading the 4-hour, you don't have to go keep hopping into the daily to see what does my trend look like? You know, what's this doing? You can just see, oh, it looks like this. It looks like, you know, what direction are my bands going on the daily? Well, 4-hour pi is going up, so the bands are going up on the daily. I mean, I'll show it just to show you guys that, but see? Pi was going up on the 4-hour, bands are going up on the daily. Almost exact location. Not quite, but directionally and angularly, pretty much the same. Now, let me go into why I'm telling you this. Okay? Because if you recall, right, let me add the candles back here. Yeah, good. Good. If you recall, we want to be adding shorts But oh, dang it, I forgot to highlight the 30 again. We want to add shorts in a downtrend. I'll just do it here. I'm going to do it in the current downtrend, guys, because I don't have to keep scrolling back. All right, we want to add shorts above the 30 in a downtrend. Right? In an uptrend, we want to add longs below the 30, right? Pretty simple concept, right? Now, it's not something as simple as I get above the 30, I instantly short, right? No. Take this example. You have a really high cycle, and you get a topping tail setup with bearish engulfing right at the top of the bands. Now, that's a good short, right? But your cycle is not crossed yet. So you wait, you get the cross, you get another topping tail setup with a bearish engulfing, boom, that's where you add the last 80% of your size, right? Add 20% on the first setup, 80% on the second one, and then you book gains when your cycle gets low. Or whenever you rip to new lows, you always book gains on new lows. Okay. So that's actually a great example right here of a short setup you could take on the daily. Okay. But say you wanted to catch this not here, but up here. Okay. So we'll highlight again this 30. And keep in mind, if you're trading the daily, it's at this point, right, where you're like, all right, we're getting into the top of the bands. I kind of want to start adding to my short, but look at your cycle. It's only halfway up, right? So you have to be patient. Now, one thing we can do is one little trick of the EMA bands. When you want to catch something rolling over on the daily, you can look at a higher time frame. We'll just circle this real quick. You can look at a lower time frame. I don't know if I said higher. I meant lower. Look at a lower time frame to actually catch that. And check this out. This is a perfect example of where, if you remember, this was a short up to the top of the daily bands, and that's exactly, I'm going to show it again just to show how perfect that is. That's exactly at pi. Oh my gosh. Isn't that beautiful? Right at the top of the daily bands, lines up exactly with 4-hour pi line. And this plays into this idea of having a fractal model. And you'll see the bands on the 4-hour, that's going to be our 30-minute pi line on our day trade time frame. Like, whoa. And let me just, I like examples of this because it's pretty cool, right? The bands on the daily, I wonder if they're going to represent anything on the weekly. And what do you know? The resistance that the bands are on the weekly, the resistance we saw in the bands on the daily act as our 8 resistance on the weekly, right? So we can see, all right, price is struggling to get above the 8 on the weekly. That's big resistance. That also lines up with the bands on the daily. Furthermore, that also lines up with pi on the 4-hour. Now, why does this matter? Well, if we're trying to, make a good trade into the top of the bands, but if you remember, at this point on the daily, the cycle is right about here, right? So you're shorting anticipatory to the cycle. You're shorting assuming it's going to roll over with it when it's possible, right? Price is making higher highs here. It's possible it just keeps ripping through. So you come in on the 4-hour, and you say, all right, well, if the daily's really going to roll over, then the 4-hour is going to roll over first, right? And so what we can do is you can start shorting cycle crosses and bearish setups on the 4-hour before that happens, right? You get stopped at on that one. The next cycle cross, you got a bearish engulfing setup, and that's the short you can take, and you actually make some good money. Cycle gets low, you get an engulfing setup, cover it back, right? Another cycle cross, another bearish engulfing setup, take it back off, short that shit, right? This is another lower high at the 618 fib rejection. I know that was kind of quick. I just threw that in there, guys. But I will be using fibs a lot, so definitely want to get used to seeing those. All right, but you see how we can be trading with our 4-hour cycles? Right? And in this whole time, if you remember, our daily cycle is doing this. And it does not actually cross over until here. So we can't, on the daily, we can't short size because our cycle hasn't crossed. But on the 4-hour, we actually can come in and short size because we have a cycle cross and setups where we know where to put our stops, we know our risk. Right? And if I come in with a cycle cross and a bearish setup, I know my stop needs to be placed exactly above that setup. I know it's exactly a 5% loss, so I can calculate my position sizing perfectly to make sure I don't lose more than I want to. Right? And that way, here, let's look. On the 4-hour, you could have had a short confirmed in there. And on the daily, check it out. That would have had you short the top of the move. Whereas the bearish engulfing on the daily was confirmed here. That's where you would have shorted, or maybe down here on this bearish engulfing. So you saved perhaps 5 to 10% by using a lower time frame. Isn't that crazy? I mean, 10%, that's like average stock market returns for a whole year right there. Imagine doing this using the 4-hour 10 times throughout your trading instead of just the daily. And this will be the only time I hit on this, but this kind of also ties into this idea of using a 3 time frame trading setup, where you have your main time frame, in this case the daily. You have your higher time frame, the weekly, and then you have your lower time frame, the 4-hour, where this is what you're mainly taking your trades based off of. And then you use your lower time frame for entries, while also watching your higher time frame for bigger picture trend information. Right? So, for example, hop into the weekly here. If you were trying to trade this back in, what was this, 2017? All right, you'd have your bands are in a downtrend. So maybe you're not buying until you're back in an uptrend. Okay, now your bands, your 8's back on top and rising. So now at this point, maybe long term, because it's your weekly, long term I'm back above the 8, the 8's rising. I can be buying dips on my daily, which is my main trading time frame. And so that long-term signal is important. And see, by waiting for this on the weekly, I didn't risk, longing here, like none of that. I just waited until my long-term trend was ready. And what do you know? By the time my long-term trend confirms it, my daily has already confirmed it long ago. Okay, flipped bullish here, made the higher high here, made the higher low here. That was the technical market structure change. Okay, and then when you made another higher high, that only confirmed it further. This was also your weekly being confirmed in an uptrend. So now there was no reason not to buy dips. Okay, and here's a good example of one you could buy. Daily cycle cross, you have an engulfing setup, stop below the low, make some money. Cycle crosses, and again, this is one of those cases where when you get big distance, right, the moving average is right here and price is almost 100% above, you should take profits in that situation, regardless of waiting for the cycle cross or some bearish engulfing. Right, but we'll see. Let's see if using the 4-hour, we could have timed that exit even better. Right, so maybe you don't. Maybe you wait until this candle appears and then you take some profits. Right, we'll mark that level. Now let's see where you could have gotten out on the 4-hour on that move. Aha. So you get the topping tail, the first sign of exhaustion. Failure to take that out. Bearish engulfing. That's when you can add your shorts on the 4-hour. All right. And that saves you, what's the difference here? 30% saved instead of taking profits in the daily. And then your 4-hour cycle gets nice and low. Right, waiting for the cycle cross. There it is. There's an engulfing setup. Enter, stop below the low. You can buy any pullbacks into that zone now, which there's not really a pullback, but another cycle across on the 4-hour. Here's the engulfing setup right there. Stop below the low. Right, another cycle across there. That's another chance to add if you're not in yet. Stop below the low. Right, and this is all in the 4-hour. So you got to keep in mind when you're doing this stuff, what does your daily look like? Oh, well, I'm above 4-hour pi. That's the bottom of my daily band, so I know I'm in an uptrend. I don't got to switch my charts. As long as I stay above this 4-hour pi, I'm golden. Right? And then you're taking profits, adding and reducing with your cycle, with your candle setups. And that's how we trade around these trends with the EMA bands, guys. I think I've pretty much hit on everything I wanted to talk about with this stuff. But keep in mind, I could talk for hours and hours on end about these EMA bands, about their uses, about different coins, different situations where they work and all that. But the best information is going to come by you guys asking me questions and us doing live streams and stuff like that together. That's where you're really going to get the hand of this stuff. Get the hang there. All right, but I think I'll wrap it up here for this one just because it's been getting kind of long. I've really covered most of what I wanted to. And if you have questions, you guys know where to find me. All right? So that's going to do it. I will catch you guys in the next video. Peace.